Good evening everyone and welcome to Price Action Trading School. My name is Nenad and today we will talk about on-balance volume, or in short OBV, and under momentum indicators. These indicators are not part of standard not standard Admiral, but not standard NT4 at all, but because you have me, of course, I am always there to help you, so I will send you both of these indicators so you can actually use it. The thing is that momentum indicators are very frequently used, specifically these two indicators, among stock traders, equity traders, and of course forex traders. It's very good. OBV is very good in showing price change and axis, while Arun is also very good in showing a possible end of trend and retracement. So we will cover these indicators today, and they might be also a part of our live trading that will happen after we finish, of course, with Price Action Trading School. As you probably know, the plan is to do live trading on each Wednesday during volatility, during either London or US. We will decide about it. But at this point, of course, we need to know what these indicators and all other things can actually, how it can be beneficial to us. So before I begin with OBV and Arun, let's see the risk disclaimer explaining that CFDs and Forex trading are leveraged products and can result in losses that exceed your deposits. So to get a corresponding information on charting conditions and any other detail, you should visit Admiral Markets Global, select your country, and contact an appropriate entity. This is the part of .com website. It's not a part of .co.uk website. And today's agenda is momentum, why we need it, OBV, and Arun indicator. Simply said, momentum is measure of price change, velocity, that is calculated as the difference between current bar price and the price selected number of bars ago. The thing is, guys, price frequently lies, but momentum speaks the truth. Now, we already covered the MACD, that is also my favorite momentum indicator, but also you can hear me very frequently saying that price frequently lies. So what does it mean? For example, for traders who are not versed in Forex trading, usually when market is dropping, those traders tend to sell. And I'm sure that you've been really almost 2 years here with me with Price Action Trading School. And you know, guys, that we never sell when price is dropping. That is one of the biggest newbie mistakes and biggest mistakes that new traders usually make. I don't trade that way. The only exception is, the only single exception is that you can do that when you see breakout. If there is no valid breakout, you do not sell when price is dropping, nor you don't buy when price is rallying. I know that many of you have been probably caught in a trap of selling low and buying high, because we all want to, it's emotions, guys. It's always about emotions. We all want to actually jump in a freight train because somehow in our heads and in our mind it's programmed. It's always, we act like a program. When price is going high, we think that we will catch it and we will ride the momentum. Usually you might have some of pips by doing this. But what will happen? Price may go for 5, 10 pips and then drop. And it happens, guys. And usually you do that when you want to make revenge trades. You see that you lost, and then price is, let's say that you wanted to short, and you actually short the price here. And you miss the trade, right? And suddenly the price is going up. So you revenge your trade, jumping in this freight train. And what happens then, guys? You will learn like 5 to 10 pips. But then it will drop again. Now this is what we don't want to happen. And this is, guys, what you can see each day in my analysis. Each day you can see POC zones. You can read the price on my charts, and you know, and you should have known by now, my trading style. I always wait for the price to retrace. And you will see that live, in live trading, hopefully, after New Year. Because I will teach you, and I'm still teaching you, and I will show you how to trade price like a professional. Okay? Even if you miss the price, if you miss the entry, don't cry for that. Guys, market is there. There is a lot of things that we can trade, a lot of forex pairs. So why would we stick to one single pair? So what I'm trying to say here is, this is very important, guys. Momentum gives us the force behind the move and push the price into desired direction. What it means, when price is dropping, our desired direction is to the upside. This maybe, now I know that for people who've been following me and here on YouTube and live trading, this is logical. But maybe for some people who are not versed into price action and general trading, this might sound odd. But just think about it. Think about what I say. Momentum gives us the force behind the move and push the price into desired direction. When price is dropping, we want to see the loss of momentum to the downside and momentum push to the upside. Why? Because this region here will give us the price for another drop. How many times, guys, on session recaps? Remember, guys, session recaps are a great way for you to make pips and learn the way of price action trading. How many times, for example, the price was dropping, we made our entry here, the price got to this zone, sorry, then dropped again. Usually this is initial pips. This will provide you with initial pips. But then the price might continue to the upside. But because you saw that there was no further momentum to the downside, you protect your trade. And usually this POC zone is the last line of defense for, let's say in this case, bears. Because if price is going high, usually there will be a trend change. But here, this is crucial. Because this was the last line where we could have sold the price before it proceeded to the upside. So when we sell, guys, we want the price to go up. When we buy, we want momentum to the downside, because here is where we will buy the price. Now, market frequently hit areas of support and resistance. It hits the areas. But we don't trade every single area of support and resistance. In order for support or resistance to be valid, we need to see other confluence points. It's called confluence, POC. POC zones are made by support and resistance, order blocks, previous breakout spots, historical buyers and sellers, EMA 89, Camarilla, and occasionally there might be some chart pattern. So those POC zones, when they are hit, we enter the price. But what is the problem with that? The problem is how to identify those POC zones, right? Now, this is not what we will talk and what we are talking about now. This will be covered in a separate session, and it requires practice. But what is important is those order blocks, those previous levels of support resistance, because they will repeat in our moment. What we want from momentum then? Well, we want momentum to bring the price to us. I always say, don't run after the shadow because you will not catch it. If you try to run after the shadow, it will escape. But if you stand still, it will come to you. Such is the market. From momentum, the only thing that we want is to bring the price towards our setup. We embrace the price. We set the trap for the price to go in desired direction. We hunt the price, guys. We are not playing, and we don't play hit and run with price. If you play hit and run, you will lose. Simple as that. You want to stalk the price, to be behind the price, to wait in shadows and set the trap. The trap is POC zone. Momentum brings the price towards our trap. So I hope that I have explained the primary logic behind the trade. Or we can always say, sell when price is overbought, buy if the price is oversold. That's the only thing to have a valid position trade. Now, if you're a patient trader, you probably will have success. But if you're too impatient because you're too eager to cover up for a loss or make pips, well, then I need to disappoint you. In the short run, you might see some success, but in the long run, you definitely will lose. I mean, I don't know any trader, guys, who make anything out of forex market by buying when price is going high or selling when price is going down. More or less, or sooner or later, a trader will be caught in a fake breakout. And after a couple of those fake breakouts, usually revenge trades will happen. And there is no point in that, really. The logic is, the faster the price increase, the greater the increase in momentum. And the faster price decrease, the larger the decrease in momentum. So we actually want to wait patiently and sell at the overbought POC zone and buy at the oversold POC zone, because this is trend. Trend is always trust and pull back, or trust and pull back. Pull back is what we are interested in. Other name for pullback is retracement. Another name for a pullback is loss of momentum. So what we have learned so far? Well, we have learned that we always have, always and always, the similar pattern. That's called trend, retracement, reversal. So trend is this. Retracement is this. Reversal is this. Make a trend line or two and you will spot the reversal. This is reversal. So we don't know, guys, when reversal will happen. I mean, if we all knew always what will happen and where to go and hunt for reversal, probably we wouldn't need any price action training school. We will always be like in ahead of the price. So actually we would be leading the price, not the price. It's not vice versa, right? So it's not possible. What you need to understand is when it might happen and when to stay out of trade or take your profits. There is an old saying, no one got broke by taking profits. So if you see that reversal might happen, then why wait? Just take your profits and step away until new trend has been confirmed. Because after the reversal, there will be another trend. And retracement in the context of a trend, and again reversal and another trend. That is how Forex and how markets breathe. Trend, retracement, reversal. Momentum loss for trend entries, and that is what we need. For example, guys, I will show you setups that were here that happened, but just to understand me better. Here, on our analytical section, when you go to technical analysis, let's use this example, Australian dollar bullish continuation. So what did I say about POC zone? If you took the entry here where I said it was a POC zone, you could have made nice pips. And actually, some traders sent me a message today on Twitter that they have made some nice pips from this analysis. So POC zones are always zones where we place our entries. It should have been clear by now. So you can see here, guys, the price was in uptrend. Now watch the context. This was pullback in trend. This was pullback in trend. Every single drop of momentum is actually retracement. See? Retracement. And I have calculated that POC zone is exactly at this spot. So we've actually, if you bought here, if you had bought here, you would have lost because this was a huge drop. More or less, this is like 150 pips, so you would have lost your trade. So that is why you don't buy tops. The price was oversold here, and at the same time, it was a POC zone. So the chance that we will get a good entry was big. And this was momentum loss, retracement. This is what we've been waiting for, guys. And look at MACD going down. But the price was still in uptrend. But this indicates that price was retracing. And it's good to buy here because you're buying low. Okay, another example was from, what I would like to see that dollar yen, because it was a good example here what we are talking about now. No, this was not. Yes, this was good, but I'm not searching for this one. Let me try to find another one, but I think it's on Forex Street maybe, but oh, here, no, it's here, of course. Dollar yen lower highs and lower lows. So here, guys, we had actually rejection from POC2. I gave you two zones for possible short trades. Here we had POC and POC2. Now, even there, the price was a little bit overbought. We had H4. We also had a lot of confluence, 61.8 trend line. And we also saw historical selling here. Well, not much here, but here, historical selling. But what happened? The price went to POC2 and then rejected. Well, the difference between POC and POC2 was not big. POC2 was 100, let's call 103.80, and the bottom of this was 104.08. So it's like 28 pips, not a big difference. But obviously, POC2 was better zone to short into, because price went to POC2 and dropped straight to, I think it dropped even below this POC towards this point. So it was like 40, 50 pips. Why? Because here at this point, we have 88.6. I mean, the price is so eager to test 88.6 once it's in a deeper retracement. So 88.6, trend line here, H5, a lot more historical sellers. See here, red line also. So it's, you see here how many sellers. So that is momentum, guys. Momentum broke through POC, but it slowed down around POC2, and we had another momentum push afterwards in trend direction. So we were aiming for momentum loss. So here this was downtrend, momentum loss here, and it was a momentum loss or momentum retracement to the upside just for us to sell into. Once we placed an order in POC2 zone, we were safe to trade to the downside. That is why momentum is always needed. Unless, guys, you want to trade like I was saying, too low to sell or too high to buy. Usually you will get trapped and you will lose your trade. So you need to avoid that practice. Now, let's talk about OBV. On balance volume is a running total of volume. So when we talk about volume, we are not referring to Forex volume, because Forex is not centralized market. There is no central exchange that can give us data about volume. We can take brokers volume, tick volume. So that is what we can actually measure. Now, on balance volume uses brokers volume data and give you the calculation of possible price change. What is also important here is to know that OBV is not used like standard indicators. Not like if OBV is above 100 or minus 100, it means the price will go up or down. What I like to use OBV is to see possible reversals. That is why we can use it as divergence, but we can also use it as a trend confirmation and trend lines. Okay, so we trend and trend lines. Okay, now let me show you the chart, and this is on balance volume. Okay, just give me a second. OBV here, I will put it on the chart. So this is OBV. It's not, as I say, it's a custom indicator, but this indicator is free to use, so I can send you. Well, the divergence is not free, nor I don't want to promote it. I will just show you how you can use the divergence with OBV if you don't know how to chart it yourself. I think there might be some free OBV divergence indicators on the net, but I don't have it. So I personally have paid for divergence OBV, so it uses account number and it's not free, but this is free. So you see, this is on balance volume. Now, if we don't use it as divergence indicator, we can actually use it for a trend confirmation. But how? Very easily, guys. In uptrend, you connect bottoms like this. So you need to have ascending trend lines here like this. Can we forecast, watch this guys, can we forecast reversals? Yes. If OBV breaks this trend line here, we will sell the price. So it needs to break here. And here you see on euro dollar you don't see a clear trend line. This is the only trend line that you can think of. If you put another trend line like this, I mean it's too steep. But watch this, it's not that steep on balance volume, OBV. So what will usually happen is, if this OBV breaks the trend line, we enter short in euro dollar. I mean, guys, I'm teaching you, these concepts are price action concepts. So as I already explained, excess of OBV is important. These shallow trend lines are a perfect example of a trend continuation. You see, you just need, guys, to watch this. Okay, forget the chart now. Watch this, guys. This is breakout here. Watch this. Breakout. This is W leaned. If it went down, this would have qualified for M. Oh, how you cannot see, guys? Oh, yes. I don't know why you can't see the screen. You should see the screen, guys. I didn't see anything. Okay, I will go through this again. Now, pay attention, guys. This is on balance volume. Okay, and here you see a trend line on euro dollar. So here on euro dollar, you simply cannot draw a good trend line. This is okay trend line, you see, but this one is too steep. I don't like this. On OBV indicator, watch these trend lines, guys. Great trend lines. And now if this own balance volume indicator drops, below this trend line. Because euro dollar is probably, let's see. Yes, guys, this is resistance now. Watch this. So daily resistance here. If OBV breaks this trend line, this could be a sell trade on euro dollar. Watch the continuation here. Watch it, guys. Here, this is breakout. This is W leaned. If it had broken this trend line, it would have been M. Watch this, guys. W again. And another trend line here. Watch this. OBV is great to use in conjunction with trend lines. It's not hard. You can do it yourself. Just draw in uptrend like this. Just make those trend lines connected from the bottom to the bottom, like I did here. And OBV can be a signal for either continuation or reversal. If you see, guys, a downtrend, okay, here we have a downtrend. Watch this. Trend lines all over the place, guys. Trend lines all over the place. Do you see this? Downtrend confirmed by on balance volume. Here the trend line was broken. Here you see this was retracement, guys. You see downtrend, but you see down, 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 then retracement. You have two trend lines here, and at the cross of exactly here, this was confirmation that the trend will continue. So at this point, this could have been a signal for new entry here. And what happened afterwards, you see. Okay, let's rate this trend line. Like this. Okay, here another trend line. And watch this. At least two bottoms you can connect. But clearly this was signal for short. But where, guys? Watch here. We'll make this easy to see. Okay, here. So from this place, price dropped 20 pips, hitting so important 0.85060. Now, you see, this was historical support on euro dollar. And I was clear with this, only if 0.850 breaks, the price will proceed to the downside. What happened is, price went down and stayed here. Watch this. Watch OBV spike here. And then what happened? V-shaped reversal from this support. Here. See? And uptrend was confirmed here. This was final confirmation of uptrend from this, at least on intraday basis. Now, you might wonder why this is going so much to the upside. The answer is clear at this point. Market is de-risking ahead of US elections. Due to strong news about different affairs, Clinton versus Trump, Market is nervous now. And dollar is losing strength. And yen is gaining. So this is called de-risking. And market is in risk off now. Don't forget that market will move, but don't be afraid, guys. Whoever wins, nothing important will change, in my opinion, really. It just, we will see more volatility if Trump wins. We will talk about it on a separate webinar. And probably volatility will be less if Clinton wins. But you don't really need to be afraid that anything will happen whoever wins. Everything will be okay and the price will consolidate. So my point is, follow momentum. Follow this. This is what it's good to have on your charts. It can give you the sign of reversal, continuation. So as I said, if we see a close of 1 hour candle, but OBV should also close below this trend line, somewhere around this point, the chance is that it will retrace. So a sign for a possible counter trend trade. Also another thing is so-called divergence. Okay, this is Arun, this is divergence. Divergence is automatically plotted on this indicator, but as I say, this is not a free indicator, so it's paid because you need to have a count number for this. I mean, I don't need this. I received it in the package. And the thing is that it shows divergence. Hidden divergence is for trend continuation. Regular divergence is for retracement in the trend. So this is just how you can also use OBV with divergence. Have in mind that divergence is only confirmed with other indicators. In order to qualify for a divergence trade, price must be at strong support or resistance. There is no other exception for the rule. And now what I will show you is, but I don't use divergence that much on OBV because I use it with MACD. So I was really focused on showing you trend lines with on-balance volume because this is momentum indicator, guys. Okay? It's momentum. So this is used for entries. No, there is no overbought or oversold. MJ, as I said, the axis, the movement is important. There is no overbought or oversold. If the price goes up, OBV will go up. But those peaks are much better defined than on price itself. If OBV is going down, price is dropping too. Another indicator that is also interesting for traders is Arun indicator. Tushar Chandel made this indicator. He was the creator of this indicator. And he also created Chandel Momentum Indicator. What is important for Arun indicator? When momentum in the market changes from bullish to a bearish and vice versa, Arun up or down will cross over each other and change sides. Those are indicated by blue and red colors. When market is trending with strong momentum, Arun indicator will display extreme readings. But when market is consolidating, the rune up and down will stay parallel to each other. So this is how we use a rune indicator. We go to, a rune. Here on the indicator, we double click and you can place 500 bars calculation. It will show a rune on last 500 bars. A rune period is 10 and you add levels to your system. 80, 20, 100 and 0. You see here, I mean obviously 0 is down, so you won't be able always to see it. Now watch, for example, dollar yen. Dollar yen, you see, blue, red, blue is below red. Red is up. At this cross, this was a signal that the price will probably change. And what happened? The price changed. Here, this was a signal that the price will retrace in uptrend. Why retrace? Because guys, this is downtrend. And a rune is not trend indicator. It's momentum indicator. So this here, blue cross above red, is a signal that this is retracement. So you wait. Here, this is another signal that the price is back in tracks. Here, it's a signal for a retracement. Here, it's a signal for another move to the downside. So see how it actually measures retracement and how it gives you extreme readings. This is good when we have trend. But guys, when there is no clear trend like this, price might get parallel to each other. If you see that the lines are very parallel to each other like this, you know that the market is ranging. But if you see that lines are like this, diverged, this is a trend. See here and see there. So a rune indicator can be used in your system or any system as a complementary indicator that spots momentum change along with price change. So that is good why you can use it. You can also incorporate different time frame strategy. For example, watching 4-hour time frame, you see 4-hour here is clearly down. It's indicated by these two lines, 100 level, a rune up, a rune down, and 100 and 0 level, a rune up. A rune up is blue, a rune down is red. But when red is at 100, blue at 0, it's a strong trend. 1 hour is the same. 15 minutes. Now this is retracement on 15 minutes. So what you need is to see when this retracement will end, so you might get another entry in the market. But the thing is, always watch for important support and resistance levels. It's very, very important, guys, because no matter what indicator is telling you, you won't be seeing any success if you sell at support or buy at resistance unless there is a strong market movement breakout. So this is what I can send you, OBV and a rune, guys. Just send me an email. I will send both of indicators to you. And I see some comments. Ilya is saying if Fed does not rate hike today, euro dollar will spike. Maybe, we will see, but I don't think that there will be a rate hike simply because US elections. And also, guys, as I said, it's their risk now. Market is their risking. yen is gaining strength while dollar is dropping, and you can see the dollar index is dropping too. So, I mean, it can happen. But I'm telling you, in normal market conditions, forget the news, in normal market conditions, this is, guys, how you can use it. Small impact news, not strong impact news, are okay. But if you have a Fed announcement, central bank announcement, NFP, then you don't use these. This is for positional, guys, trading, intraday or intra-week trading. Also, you can watch on balance volume for a possible trade, as I already explained, guys. Now, if we see that this, you see here, it's hooking up to the upside. But if it drops suddenly, that can be used for a small scalp entry. So use it to your advantage. I hope that you enjoyed. If you have any questions, guys, just ask me. If not, then we can call it a day. And okay, see the question. In Australian dollar and New Zealand pair today, both are in uptrend, but Australian dollar New Zealand pair is sell direction. In Australian dollar, both okay in sell direction. Okay, guys, did you read my analysis today? Or let's see, guys, it was actually yesterday. I will try to find it for you. Give me a moment. Okay, just give me a moment, I will show you. Yesterday, I gave you the analysis for New Zealand dollar. And again, if you took the entry, I don't know why they put so small pictures, really. I told them once to use my full screen pictures, and this doesn't look good when it's, so you need to zoom in. So, but I was again clear with the analysis. If you get in a long trade on New Zealand, you should definitely make pips. So New Zealand was up. Again, dollar is a loser here because New Zealand went up. Now, this was the analysis on Forex Street. And yeah, it went up. Now, on Australian dollar New Zealand, here you see a strong drop. Well, Australian dollar pair is a lot weaker than New Zealand. Now, I don't have currency strength indicator here, but if we compare Australian dollar and New Zealand, you will see that New Zealand dollar is much stronger than Australian. Now, Australian dollar versus dollar, you see, it went down, now it's going up. But watch this, watch Australian dollar, and now watch New Zealand dollar. What do you think? Now already this is the answer to your question. Australian dollar, not that strong, right? New Zealand dollar. So the logic is that Australian dollar, New Zealand, of course, will go down because New Zealand is much stronger than Australian dollar. And that's, you need to watch this. Also, you had a central bank report from RBA. There was no rate hike, no rate cut, but obviously it was a bit bearish for the pair. So read the full statement on Reserve Bank of Australia and you might see that it's not that hawkish. It's more like bearish than it's hawkish. That is why Australian dollar is losing and New Zealand is much stronger. Okay, that is the answer to a question. I hope that it helped. If you have any further questions, guys, just go ahead and ask me. Okay, Ron is saying thanks. Sure, Ron, no problems. I'm glad that you enjoyed. Any more question, guys? Do not hesitate to ask me, please. Okay. I don't see any further questions. Red is asking for MACD. Okay, guys, send me your request for indicators now. I will send you. Ready? Send me your MACD indicator. Guys, I have like 200-300 mails each day. And sometimes I might forget to actually send you something. So please just remind me and I will send you. Send me an email request and I will send it to you. Okay, guys, thanks. Just send me a request and you will be mailed. Thank you guys for listening to me. I hope this helped. Now it's much clearer how we use momentum and how we use positional trades. And I will be here with you tomorrow. So yes, tomorrow we will have another webinar with Chris, of course, as always. Thank you guys for listening. I will be here with you soon. Expect me also on Monday with new setups. And I hope that you enjoyed weekly profits that we made. Thanks and talk to you soon. Cheers.